did? Okay, good. What about the second question? Hope you are doing well. I am working on the charts day in and day out. It actually is very exciting to work on them now as the picture gets revealed. When you find out how price is moving, clearing and creating supply and demand zones, I am trying to find out the demand zone. See pictures as there was no 50% candle next to the explosive candle on the daily chart. Okay. I went down to the H4 and tried to find the zone. I am a little confused as I marked two zones, one in blue and the other in brown. I placed two vertical lines as guides. Okay. I'm not sure on which side of the vertical line we are supposed to find 50% also. So in an area like this, the demand is like that because this is 50%, right? This is 50%. The wick comes down, but look at this red candle. That's the beginning of the move. So we wouldn't use master candle principle here because it's the beginning of the move, and the wicks come down here. So that would be the zone like that. Okay. How do you draw a supply zone in this scenario? If you draw the zone from the top of the master candle, so in this scenario, okay, so let me just show you. Saying that this was demand. It's a very tricky one. I think there's a good argument to be had that. Let me see, drop. Yeah, it would be this way. That would be, it'd be like something like that. Because that's the 50% candle, long wick, long candle, long wick. Yeah, so all you'd have to do is just look at it like this. Remove that, and it tells you everything. Like that. So you did it right. You did it right. I was working on this chart and got confused a little. On the weekly chart, there is a move to the upside, but there are no 50% candles. But there is a weekly demand zone below. When I moved down to the daily, there was 50% candles, but that is already a demand zone on the daily. So my question is, should I leave the weekly as is and watch out for the demand zone on the daily only? No, you should demand weekly. No, we had that demand zone, I believe, and it was removed. You don't have to go down to the daily chart to see if there's a zone there when examining the weekly. Should I leave the weekly as is and watch out for the demand? No, I would be watching the weekly as well. I would be watching the weekly. What do you do in a situation like this? The 50% candle is separated by a red candle before the explosive move. So if there was supply here, your demand zone would be like this. Don't worry about the 50% candle. It's about where the move started, right? You would only be looking at rally gap up, or it closed here, rally, drop, and then a move up. So the beginning of the move is there. Okay, so it would be from here to there, the demand zone. Lindsay, I think you got this question answered for you, right, Linz? Facebook. Oh yeah, the guys were looking at Facebook. The zones and stuff. Yeah, so you can see, yeah, he answered it. Good, good. Yeah, so there's a reason why we don't trade stocks because can you use supply and demand? Yes, you can. But are you going to find that the concepts and principles that we apply on Forex charts and on commodities and gold and oil, it works the same? It doesn't work the same. I mean, you can still extract information from the chart, but it's not going to be as good and solid and reliable as what we can extract when we do the analysis on currency pairs, liquid currency pairs, gold, oil, silver to a certain extent. If you're going to trade supply and demand on the stocks, I would stick with higher time frame. Okay, so like if I was trading stocks and I was trading Facebook, would I be trying to get in on 4-hour demand zones? Not really. Not really. I'd be sticking with the higher time frame zones, the higher time frame analysis. So let's see, this is all-time highs, right? If I'm not mistaken, yeah. So there's demand there. But you see, it went higher, okay? Maybe there was a daily zone nested in there. Let's see. So there's demand here. Yep. I don't see anything else. Hold on. Okay, there might be something here. So yeah, I don't see anything there. And on the monthly, that's your demand. So you can see that price fell, came close to hitting demand, and then just starts to head higher. So I don't like trading charts like this. Another reason why I don't want to trade charts like this is because you're in all-time high scenarios. You don't know how much higher it's going to go. Okay? You don't. Because you don't know, there's nothing that it's reacting to the downside from. I don't like buying something that's going to all-time highs. Why? Because there's no idea of how much higher it's going to go, if it's going to go higher. If it goes higher, great. All-time high scenarios, it's breaking up to all-time highs, but when is it going to drop? Do you just keep on buying until it drops? You can do that, sure. There's techniques for you to get into trades. If it goes higher, if price closes above here, and then you have a trend line, great. And then you have demand, great. Buy and stop losses below demand. So you can use our concepts and principles to get into trades when price is going to all-time highs, and you know where to put your stop loss. It's not a guessing game. That's the beauty of what we do. It's not a guessing game. There's a very detailed reason why. So, let's say price does this. Okay, and you're here. This is demand. Oops. This is institutional demand. Okay? There's no doubt about it. There's no ands, ifs, or buts about it. It is guaranteed demand. And if you have a trend line like that, it's an uptrend. How do we know? Because we know what an uptrend is. We know the difference between an ascending trend line and an uptrend. That's why we study the charts. That's why we do the work that we do, is to be able to differentiate between when the institutions, because it's all about what the institutions do, right? This game is all about the institutions. What is it that they qualify as an uptrend? What is it that they create on a chart that they create as an uptrend? You know, it depends on what they do. Not retail traders, not hedge funds, not those guys. Those guys aren't big enough to to control this. So whatever the international banks, whatever they constitute as an uptrend, that's what we take note of. That's what we study. And then we look into the reasons why. Why is that an uptrend? Why is it to the banks that that's an uptrend? What's happening on this chart? What dynamic is in play that makes this an uptrend? When you understand that, you can look at any chart and know when price is in an uptrend. So when you know it's in an uptrend, then you know what area is demand. So you want to buy call options on Facebook. You know, you wait until price closes above previous highs. Now you know it's an uptrend. And you base that call option on price not dropping below this area. Because could it drop? Yes, it could. But what are the chances that it's going to drop below that area? For anybody else, they don't know that it's in an uptrend, or if they classify this as an uptrend, they don't have solid reasons why it's in an uptrend. They don't know that if price drops, it will likely turn from here. They have no clue. They see a trend line here and they'll say, oh, it'll hit the trend line and bounce, but that's not necessarily how it works. It's not trend lines that price bounces from. It could be if the institutions want it to be, but it's demand zones that price respond from. So you can use these concepts and principles to understand price, 100%. But is it, you know, trying to time a 4-hour momentum shift off of a daily demand zone, you know, trying to find those intricate trades is going to be difficult. Because remember, why can we find entries and exits and reversal zones so incredibly accurately in the currency market? Is because we are looking for candles and formations created by the banks. And we know the difference between when retail come into the market and when the banks are creating candles, right? When you got a stock, Facebook, it doesn't take a lot of big players to move Facebook stock. You can have a big hedge fund coming in, buying Facebook, you're going to make a move. So the hedge fund coming in and buying, that's not what we're looking for. The hedge fund might be moving Facebook that day, but it doesn't mean that they dictate the movement of Facebook always. So the candle that big hedge fund creates, it's not reliable to base, you know, future movements off of. You understand, guys? That's why I don't like trading stocks, because you have to look at it completely different. Like I said, you can use the concepts and principles to help you understand when there's a downtrend, when there's an uptrend, where the momentum is, where the trend line should be, where the most important zones are. You know, that you can definitely use, but to time a perfect entry off of a 4-hour zone, good luck. It's not going to work out very well for you. Okay, that's been my experience. That's why I don't bother with stocks. It's not worth it for me. Okay, you know, when you get price action doing nothing for so long, you know, is it in a range? Is it in a range? What is it doing? Where is it going to reverse from? When is it going to finally stop going up and then come down? You have nothing here to base that off of. You know, at least with currencies, we can track the movements. It dropped from monthly supply. Now it's hitting weekly demand. Now it's creating a momentum shift on the daily chart. And we can time what is likely going to happen to the very, very, you know, specific area on a 4-hour chart, because we have so much information to base our decisions off of. It's all there. So it's like if you're playing a game, a very important game, that the game makes you money, do you want the rule book and the instructions in the book of clues to be, 20% filled? You want the book to be 20% filled, or do you want the book to be 95% filled with information? I don't want a clue book that's only filled 20% of the way. I want a clue book that's going to be filled 95% of the way, because I can look through it and I have everything I need to base a trade off of. So that's how I look at it. I mean, there's just not enough information on these charts. I don't feel comfortable. You're not giving me enough. So why would I want to trade a market that you're not giving me enough on? Indexes and stuff, yeah, you could trade. Does it respond? Yes. Indexes are good to trade because the big banks are trading the indexes, okay? The big institutions. And when they create a zone, you know damn well it's their zone. It's not a hedge fund coming in and creating it. It's big banks creating them, right? All-time high supply. And then you had this zone here, rally up, rally down, taken out, came down to this area down here. And look, momentum shift off of here, and then away she goes. That's big banks right there. That's the big banks. So I can spot that. When you can spot that, that's great. Look, daily momentum shift right here. Drop, daily momentum shift off of that weekly area, and away she goes. That is banks. So, if you want to trade, these indexes, great, do it. I think they're great. They respond to supply and demand very well. Dow Jones is good too. 3-month. Demand. Created by the banks. Taking price to all-time highs. Price comes down, emotionally travels all the way down here. Exactly to the area of buying where the banks were filling in orders. That's no coincidence. That is well orchestrated. Okay, look to like within pips of hitting demand. Well orchestrated. And then they close price, properly controlled candles from the zone above it. Well orchestrated. Not random at all. Not random at all. Okay? And this is where Pershing Square and the big boys were buying. And they're like, hey, we just thought it was a great idea. Yeah, okay, sure you did. Like Warren Buffett. Hey, you just have to know how to pick stocks. Yeah, sure. Sure. So this is all well controlled. So you have to know the difference between, some small time hedge fund coming into a stock with a low float, purchasing, creating a candle, and big banks who control markets. You only want to track the candles by the big banks because they are the ones that will move price in the markets. That's it. So can you spot those candles on the big indexes? Yes, easily. On the higher time frames, yes, because higher time frames means you have to control something for multiple days, multiple months. So you're not going to have a hedge fund that's going to control a market for multiple months. So you got to look at the higher time frames, and you're more likely going to see solid zones there. Yeah. I'm a comedian. You make funny jokes on accident. Yeah, I can be silly for sure. My day is always serious, right? Always. I take my charting, I take my work extremely serious. I don't joke around with my work or my charting or my analysis. But I mean, geez, it could weigh heavy on your mind if you're always so serious. So I like to always toss in some fun and toss in some jokes and stuff. All right, so back to US dollar, Japanese yen. So I hope that answers those questions, because I can't tell you how much I've thought about this stuff, okay? Because I loved stocks. I did. When I first started trading, I was a stock guy. And I was like, ooh, I have all these skills. I can find buying and selling on the charts. This is going to be easy. I'm going to buy stock options because I know it's not going to drop lower than this area. Why? Because that's demand. Yeah, and then it doesn't work. And then you have to think about why. And then you concentrate on the ideas behind supply and demand and what makes it work. Why does it work? When you come to realizations as to why it works, then you think about it. It only works because the big banks are buying. If they're not buying, then that means it's not going to work. So I'm in the markets because I like to solve the puzzle, because solving the puzzle means that I can be financially free and I can build a very strong portfolio consistently because of the knowledge that I have. So if my knowledge applied to one market gives me a lot higher odds of me being consistently a winner in the markets, then that's the only reason why I want to trade that market. I just want to stick with that market because it's in my favor for me to win. Stocks, you buy a stock today, market closes, you go about your business, you have dinner with your family, the CEO of the company dies because he got hit by a truck. What happens to your stock? What happens to your stop loss? Your stop loss doesn't matter anymore. Nothing matters. You have no risk. You have no control. It's out of your hands. I'm not investing my money in something where I don't have control, where I can't limit risk. No way. No way. Unless you want to be a guy. If you think that way and you're okay with that, you might do well, but you're not going to last for a whole career, right? And if you listen to any of the top trading podcasts that are out there, they'll tell you it's one thing to be successful in trading, it's another thing to be successful for a long time. Because some people that have success in trading, they don't make a long career of it. Eventually they blow up their account. Why? Because there's certain things that they're doing that they're not doing right. The first thing is that their strategies don't work in every market. That's the first thing. And if you don't have risk control to lower your risk, exponentially as you start losing money, and you can't recognize that your system's not working anymore, your strategy is not working anymore, and you don't know how to adjust, it's just gonna play heavy on your mindset, play heavy on your account. Then your mindset starts to drown, and then you can't think clearly, and then you can't take trades properly. It's just a big mess. So, and we're human beings, we're going to fall into those traps. That's why you have to have something solid that's based in reality, where you can control risk, where you can understand what the markets are going to do, when you know the right time to be involved, when you know the right time to stay out. You need clear answers, because that keeps your head straight. That keeps your mind straight. And if your head's straight, your mind's straight, you can sleep at night, you can have dinner with your family without worrying if somebody is going to be run over by a bus. If you can have all those things, it builds up your confidence, it builds up your mental game, and you'll just be a winner consistently, in my opinion. That's just my opinion from what I've observed. All right.